What's up, YouTube, and welcome to another exciting personal finance video where I talk about investing, the stock market, economics, gold and silver, all that good stuff. If you haven't done so already, please like this video, subscribe to my channel, check out my website, My Road to Wealth and Freedom, where I just released a new post about whether or not we're going to get some inflation or deflation. It's a big question that's been lingering over everything this year. No one knows for sure, but we have a few clues. First off, my disclaimer, I am not a financial advisor. This channel is just for entertainment only. Please consult a financial professional before you make any money decisions. I am not given any advice to buy precious metals or buy stocks or whatever. Do your own research, be smart about it, and talk to a financial advisor. Okay, guys, with that out of the way, yeah, some pretty crazy things happened last week. Of course, we are kind of in the midst of this stock market correction. The NASDAQ was way overinflated with Tesla and Apple, Amazon, all this craziness. It was expected, I guess. But we had a couple interesting people make the little media circuits there last week. And I thought it was really interesting to hear what they had to say. Particularly because one is like basically an investing legend. That's Stan Druckenmiller. Um, and the other one is former Fed Chairman Alan Greenspan. He's the one who kind of wrote the book on where things are going here, and a lot of his policies have kind of evolved into this QE infinity. So very interesting to hear from those people. First off, what did Stan Druckenmiller say? He described the stock market as a, quote, raging mania. And he blamed the Fed for basically, inflating one of the biggest bubbles in history with the stock market. And it's obvious why the stock market is trading at such high and lofty levels today. Basically, Jerome Powell, back in March, said the Fed will do whatever it takes to prop things up. And basically, he's going to keep interest rates low. They're going to do QE. They're buying the junk bonds and stuff. It probably won't be long until they're buying stocks. They probably won't buy individual stocks, but ETFs, maybe the S&P 500 index or Dow Jones, or maybe a sector index. This is basically not good. This is kind of, and that type of rhetoric and those type of policies by the Fed is drawing people into this market that really don't understand or really have any business to be taking these type of risk. And of course, you got like all the whole sports gambling's been shut down for most of the year. I'm not sure if it's coming back yet or not, but of course you got Dave Portnoy in there buying stocks, and stocks never go down. And you got the whole Robin Hood crowd, and you have all of these people jumping into the stock market. It's pushed it to all-time high. It's just ripe for a major crash. It's not to say that it will happen. We know stock market bubbles can go on for many, 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 many years before that happens. But we do know that the day of reckoning is approaching sooner or later. And that's basically what Stan Druckenmiller was saying. Of course, that guy's a billionaire hedge fund guy or investment fund guy. So he really knows what he's talking about. He's an old guy, man. He's been around since like the 70s. So he knows what's coming. And that kind of echoes what Warren Buffett was basically saying at the Berkshire annual meeting back at the end of March, early April, where he sounded super bearish. If you look at what Buffett's been doing, he's been selling bank stocks. He's been selling so many businesses, and instead he's cashing out basically. And the few investments he has made has been in Barrick Gold. He bought like 1% of that company, and he put some more money into an oil company, Suncor Energy. Of course, he's bought some natural gas assets and stuff like that. So basically he's buying commodities. which is quite telling because once we get some, significant inflation, those commodities and, precious metals, they're going to outperform everything. Um, and he's also raising cash, which kind of suggests he's expecting a market crash too, which in the short term would be deflationary. But in the long run, the Fed's probably going to respond like it has every other crash, print way more money, fill the holes, um, and try to keep this going for as long as it possibly can. Of course, in the US and in Canada, the universal basic income is floating around. That idea is gaining steam, gaining traction. If the Democrats win in November, who knows where that's going to go? I know the Liberals here in Canada, they want to. That's probably going to be part of their throne speech coming up. So, all in all, this is just all going to debase, devalue money. Whenever the government starts giving out free money, it just drives the price of everything else up. All their subsidies. I remember like 10 years ago, the big thing is, you'd buy a furnace for like, I don't know, $2,000, something like that, $2,500. Government comes out with this subsidy. If you buy a high efficiency furnace, they'll pay half the cost. All of a sudden, you're not paying $2,000 for a furnace anymore. You're paying $4,000. Because business just raise their prices. That's exactly what happens every single time government sticks their nose in anywhere. They offer any type of rebate, the price just goes up to cover the amount of the rebate. You, the consumer, we, the consumers, never see any of that. We never get the benefit of that. So I guess that's just the government's way to kind of prop up, the economy and businesses, because it does nothing for consumers. Don't kid yourself. So if they're giving everybody a universal basic income, guess what? Life for the rest of us who are working, who don't get that, will just go up. I don't know, 20,000 a year, 15, whatever it's going to be a year. That will just get added to our expenses. We will not see any real benefit from this, and instead we will be effectively $15,000 to $20,000 a year poorer because all our cost of living is going to rise that much. This is the type of BS that governments do. They intervene in everything, screw everything up. They wreck the middle class, and all in the name of helping the little guy. Well, the poor people getting that $15,000 a year won't notice a difference. Prices will have risen, guaranteed. Good luck with that. Anyways, that's my rant on that, on the UBI question. But I want to move on to the next guy, Alan Greenspan. Yes, the maestro himself. Everybody remembers him. He did such a great job with the economy and everything like that. He just put interest rates to zero. He propped up the market after the tech bubble blew up, which basically caused a huge housing bubble. He sowed the seeds of the 08-09 financial crash back then. And now he kind of sees where we're heading. We were never able to normalize interest rates. So basically the Fed's effectively out of ammunition. They put interest rates to zero. We are at 0% today. Will they go negative? I mean, going negative, is that really going to help? Europe and Japan, they've been negative forever. And how have their economies done? Horribly. They haven't done anything. This has just been a massive deflation over the past, 30 years for Japan, 10 for sure for Europe. There's just no growth. I don't want to sound too negative. I know this is really sounding negative, but you just got to be real. If you just open your eyes and just look, you have these very smart investors like Buffett and Druckenmiller, Ray Dalio. These are all billionaires who kind of see the writing on the wall, and there's others too. And now you have a former Fed chair, Alan Greenspan, basically the father of all this crap that the Fed's doing right now. This guy wrote the book on it. Now he sees the problems, that are just around the corner. What was he saying? His big fear, same with Druckenmiller, probably same with Buffett, inflation. Druckenmiller said he was afraid of 5 to 10% inflation. That's annualized going down the road, looking out a little bit. And you can just imagine, what was Greenspan saying? Well, Greenspan was basically saying the same thing. He said, A, that the U.S. is underestimating how significant their deficits will be going forward. And why is he saying that? Well, not only does the U.S. owe nearly $27 trillion in debt and counting, but there's also these off balance sheet liabilities like Social Security, Medicare, Medicaid. These are entitlements, and those are estimated as being well over $100 trillion. I saw Rick Rule. He commented. He said it was probably about $125 trillion. That is a lot of money that's not being taken into account right now. And that is exactly what Alan Greenspan was saying. He's worried about inflation because we have the U.S. with 27 trillion in debt on balance, on their balance sheet, and they have this 100 to 125 trillion dollars off balance sheet liabilities. Well, how is this going to get paid for? Greenspan is worried about it because he knows how it's going to get paid for. They're going to print money to pay these liabilities. The people getting these Social Security checks, basically, the money's not going to buy them anything. Good luck buying a quart of milk when milk is $30 a quart. Good luck going to get a liter a liter or a gallon of gas when gas is like $20 a gallon. Like, this is just crazy insane. And this is another reason. So, on the heels of that, plus, the market's sort of recovering, and I see it today. It's up a little bit today. Who knows if it's going to stay this way or if it's going to go back down. There's so much craziness happening. But this should be an important lesson to everybody. Is Donald Trump going to win in November, or is Joe Biden? It really doesn't matter. Neither one of those guys are going to be able to handle what's coming. Like presidents really don't have all that much power over the economy, over these like macroeconomic things. Let's be real. 27 trillion, another 125, that's $150 trillion. No president will be able to deal with that. And that's going to basically cause the US dollar to fall. They're going to print money. They're going to devalue, debase the currency. It's unclear who's going to be buying treasuries anymore. It's unclear at this point if the US dollar will even remain the global reserve currency. I think it's being challenged right now. So going forward, we'll kind of see where that goes. I'm not sure if they're going to try to back, a global currency with gold, or if they're going to, I think the Bank of International Settlements is talking about this kind of a blended foreign exchange where it's a percentage of yuan, percentage euro, percentage yen, maybe even the Swiss francs in there, and maybe the US dollar, anyways, British pound. Like, it's not looking good for the US dollar. That's not to say that things can't turn around, but honestly, it's like there's just so much, and not just in the US. I don't want to be like, hey, it's just the problem is with the US. No, it's a problem worldwide. The whole entire world, every central bank is printing money. It's just crazy. So what's going on today? I'll just want to show you guys here. Good. Live gold price at Kitco. Gold is up 1959, let's say, and not much wonder when you got these guys like Druckenmiller and Alan Greenspan talking about inflation. I just want to kind of move over, see what the silver price is doing. Last I checked, it was somewhere around the $27 mark. 27.16. It's up a little bit, almost 2%. I've been wanting to buy another 10-ounce silver bar. I really like that silver gold bull bar. Check out my video on that if you guys haven't seen it already. But that's kind of where we're at. And I just want to talk about like some more of this debt stuff, because look at what's going on. CNBC. This came out this morning. Steve Mnuchin, Mr. Treasury Secretary. Now is not the time to worry about the fiscal deficit or the Fed's balance sheet. Yeah, let's just not worry about this impending super tsunami of debt crisis, devalued chaos. let's just kick it down the road. Try to forget about it just for now. Just for now. We'll deal with this later. Right? Tomorrow's always a new day. Yeah, not good. And for all you Canadians out there who think we're doing so much better in Canada, this came out last week. Parliamentary Budget Officer, what does he say? Canada's deficit is unsustainable. Yes, Canada can only print and borrow money for about another year, maybe two, until we reach the point of no return and everyone's screwed. Yeah, so as you can see, this is a problem everywhere. There's just too much global debt. Everyone's talking about this like debt jubilee. Trust me, if you're a middle class guy, gal, you owe any money, you got a line of credit, a home equity line of credit, you got a mortgage, car loan, whatever, student loans, no one's going to be forgiving our debt. Trust me on that. They're going to make us pay or bankrupt us. So with all that in mind, that's why I am sticking with with what I've been saying. I don't know for how long now. Oh, a little out of focus there. Let me get it back in focus. There we go. Yes, diversify, people. The best advice, obviously take it with a grain of salt. I'm not a financial advisor, but the best advice I can say is you want to be diversified. I saw this thing with Ray Dalio talking about the importance of diversification. You want to own things like gold and silver. You want to own maybe a little bit of commodity exposure, oil, farmland, timber, whatever, real assets. Definitely, you want to have that exposure. Also, growth stocks like tech and that could do very, very well. I'm not telling you guys to go jump into the tech sector right now. It's like crazy high still, even with a 10% correction. It's up quite a bit from March lows and stuff. You want to have, you don't want to be married to any one country or any one market. Maybe emerging markets do better, maybe Japan or Europe or the US or whatever. Just buy a basket of things. The one thing I would not be buying, that's just me, is bonds. Once people realize what's going to happen, already bonds are yielding nothing, which is what's pushing a lot of pension funds and investors into this shiny yellow metal. When things don't yield anything and you start to get, inflation, you're going to want to have some gold and silver for sure. You want to preserve and protect your wealth. And honestly, like, we get used to a certain lifestyle. I really feel for all the retirees out there whose Social Security, or if you're in Canada, the Canada Pension Plan, old age security. I mean, these programs, they're just not going to do it. They're not going to be able to cover what's coming. So you don't want to have too much debt. I think, people really need to wake up, stop taking on debt, get out of debt, and try to diversify your assets while you still can, while things are still kind of reasonable. I mean, gold doubled off its low 5 years ago. Back 2015, it was a little over $1,000 an ounce. Today, it's just under 2,000. I don't know what price gold or silver is really going to be at. I'm just more holding some physical for personal insurance, and I hold some paper gold in my investing accounts. That's kind of how I'm set up. And these are some pretty trying times. And I think like over the next year, we're going to see really a lot of this stuff come home to roost, right? Like the amount of debt, the amount of people who've deferred their mortgages. Just think about the landlords, like who maybe they can't renegotiate their debt. They're in arrears. They have tenants who haven't been paying because you can't. Tenants don't have to pay, and then there's the commercial real estate. A lot of people are whispering about that. There's whispers about an impending banking crisis when all this debt and defaults kind of come home to roost. And in addition to that, you have over-levered consumers. Everyday people have too much debt. You have corporations who have borrowed money, bought their own stocks back, all this stuff. They have a crazy amount of debt. And now you have, too much sovereign debt. All the money printing, all like they're just making up bonds and buying the bonds and monetizing debt like crazy. Um, all of that is going to kind of come home to roost. So, yeah, you want to prepare. Anyways, guys, that's it for today. I've gone on a little bit long. Thanks so much. Like this video, subscribe to my channel, and please check out my website, My Road to Wealth and Freedom, where I just wrote that really cool article about inflation, deflation. I dig a little bit more into what I've said in this video. So that's it, guys. Take care.